All right, Doc from North America. The number is out, and you can see they took the stock market down a little bit there. This is the intraday. Let me just show you. Right. Let's use this one. There you go. So you can see this nice big drop from the number, and we'll see what all the numbers are in a few seconds. 272,000. I think they're looking for 185. How about that? So Dow Jones is only down 150 points, nothing major. This is the S&P 500 you're looking at right here. The news came out, and they were hoping that if it was lower job numbers, the interest rate bulls would have been like, yay, they're going to lower rates. Hooray for us. But no. So, what else we got going on here? Let's start it off. Good morning, this is Doc. Hey, Robin, what markets are you watching? That's Doc. I like that. So, this is, this is the classic. The markets are, let's see, May labor force participation rate is at 62.5. And May unemployment rate is sitting at 4%. Okay. Some of the numbers are starting to pour out now a little bit more now that it's been one full minute. Actually, it's been 2 full minutes now. Year over year, 4.1% on hourly wages. Hourly earnings. So, you see, we're getting a little bounce here. Can you see that? Yeah, you can see that little bounce is starting to occur already. No, look at it. It's starting to get through all kinds of numbers in here. Let's move that up. Okay, they're digging into the report. Oh, God. It's all led by government jobs and healthcare. Not much. That's the problem with it all. That really is. And we're going to go to our even more shorter term. Right there. They drove it down. Slipped back into the buy. They slipped into the buy right there, too, for that 3 little bar up move. Then back into the sell for this 6 bar move. I like the other one better. Especially with action, And so it went into the buy here after the slide right there. So basically it captured this part of it, half of the loss. No, actually it was a third of the loss. The short gave us a third of the loss gain. So in other words, we missed that. The news came out that was like 3 seconds, and then you could get short here, and bang. Now we've jumped back into the buy here. And they're perking and playing, nothing major. When we don't, until we see 3 and 4% moves, it's the rest. It's all background noise, really. Even then it gets, the breakers don't start until 7%. So in other words, they stop markets at 7%. So when you have people on the financial channels or talking heads anywhere trying to tell you that the market is being sometimes they'll say it's crashing when it's only down 100 points. It's like it's not even a quarter percentage point. I mean, people, unfortunately, in the financial industry, in the media side, are so used to the big numbers when 100 points meant something. Now, 100 points is like 26 a quarter percentage point. That's all. Like it's down 122 points, and that makes it down 0.31. Not even a third. Just underneath a third. So, so there's not much more than that. Let's see, adjust the CQT info on the screen. All right, so what we got here. Oh, so it was an AI that did that. Okay, cool. There you go, Robin. How's that? Does that look better? So, um, you know, an AI came out and said it picked 275,000 or something like that, 272,000 or 270,000, something like that. So the AI was almost like perfect. Maybe it's got it probably understands what the Fed is reading, and went back and extrapolated and back tested it, and now they can do that. 10-year bond yield is up 13 and a half bips. So the 10-year yield has gone from 4.4, I guess it was 4.29 to 4.42. Let's take a look at the 30-year bond that we keep on here. It should be like dipping down, I'm assuming. Yeah, there we go. So you can see that? A diver. It's diving. Diving. Wooga. I'm trying to push into the sell with no problem, too, at the same time. Still not weekly buy. I guess if we take that line we've been staring at and just bring it down like that more, maybe it'll bring the 30-year bond down to that. Let's see. Not your... Okay. All right. So, let's go from. What else we go to? I guess at this point you can see bonds are disappointed. Dow's down a whole 0.41%. Yeah, a whole 0.41%. It's not going anywhere. It's dead. At least give us a 1 full percent down or something. I mean, they can't even do that. So basically, money doesn't care. I think that's what it really comes down to. They're making a lot of noise over nothing, basically. Let's take a look at the euro and see what the euro is doing. We can already see there the interest rates are rising. Remember, this is the price of the bond. So when the price rises, interest rates drop, okay? And so when the price of the bond goes down, interest rates are rising. So they put a little squeeze into it this morning. Let's take a look at the euro right there. You see they did the same thing like in the bonds. They drove it down on the euro. It was a green and a red yesterday, and it did close underneath, and we were like, oh man, I wonder if we're going to get something negative, and sure enough, there it is. Still just like the bonds. You can see it's been in a weekly buy, and it doesn't seem to be pressuring it in any level. It's still there.
Okay, good. It's probably new, but that's probably the right time. So
we'll see how it plays out.
I just wanted to make sure it's updated.
See if the markets actually go anywhere, but more than likely, with the way they're trading right now, I don't see any real action here at all. Matter of fact, it's not that exciting at this point.
Can I just see the first page though? Is it possible?
Not that exciting. Okay. Let me just answer this. All right. So, all right. Now from there, let's take a look at the dollar index. I'm sure the dollar index is lifting up a little bit from this action. Let's see. Dollar index. Right there. No, the dollar index doesn't even seem to care. Look at that. It doesn't even care. It's very quiet. And it's in that weekly sell. It's totally the mirror image of what's going on in the euro. Now, I ran across some interesting articles this morning, and I think it's well worth looking at these articles. One was how the euro now is the third most active, I guess you could say, currency, and gold is number 2, and then the dollar is number 1. You know how people say, "Oh, gold is a currency." Well, right now we're measured. We can see these measurements, and I wanted to show you this. I thought that was kind of fascinating. Let's put that up on the screen. Let me find it. Let's take this article. Is that the article? There it is. I thought that was fascinating right here. The article, Gold Overtakes Euro in Global International Reserves. Let's see, what's the honest say? That email had no info and just confused them a lot. Okay. Should I send? All right. Oh, okay. And talked over that you can just use J4X has it built in, but no other service can be provided to U.S. citizens. I see. Talking to Janos now, and then we'll go through this article. I think it's a well worth article exploring. It's definitely an interesting, and they have some beautiful charts in there that really make things clearer. Okay, so from here, let's take a look at that article. I want to show you some charts on that. It was very fascinating. There's 2 good charts. This one here, I thought that was fascinating. Because, and I guess you might say, why are we looking at this, Doc, It's because our math does a good job of keeping us in the right direction. And it's fascinating. We talk about gold and we try to find fundamentals. We look at things here on an algorithmic path. We look at the way it works. And so what it really comes down to is that for that reason alone, it's nice to see some fundamentals, and it gives us a better understanding on what's going on, to what our math is telling us. Okay, and so you can see here the red is the dollar. You see it goes back to 1999, and it runs all the way to 223. The blue is the euro, the second most active currency in the world, paper currency. And then the yen is the third. We talk about this here, and then you can see the sterling. And then what's interesting is the renminbi. The Indian currency has really picked up since around 2014-15, which is very fascinating. Okay, we talk about that here. You hear all these stories about China being the second most powerful economy in the world. Well, if they are, where's their currency? They don't have a currency more than something that they do. They have a conversion factor, I guess you could call it, but it only trades about 2% of the world's markets. So, I just that alone was a fascinating chart right there. So now we go and we look at this one. This one starts to look at the international reserves itself. And you can see all the way back to 1900, then 1913, with the Federal Reserve being created, and then 1930, and then 1953, and so forth. And you can see in the 50s, the dollar became relatively more popular to use around the world. And you can see that was red. Sterling is the dark one. Sterling used to be the world reserve currency. And obviously gold is gold, all this stuff right here. So I thought that this was well worth paying attention. Then they have the old French franc in there. French franc was doing a pretty good job, at one point. And they had the Deutschmark in there too. So they must still price a French franc somewhere along the line. No, I'm sorry. There's a French franc. This is the euro. Right there is the euro. That's what it is. I'm sorry. This is the euro up there in the light blue right there. And then you can see previously to that was the Deutschmark. And then you can see the French franc was underneath that. That's that little thing there. And you can see the yen right there. These were world reserve currencies. And you can see sterling up until the 80s was like the second most powerful. And then it just, obviously fell apart. The Deutschmark got going. And then the Deutschmark, and now it's basically the euro on that other chart. And the renminbi's, looking pretty good there. And you can see there's the euro right there. And so, and the yen is still holding up a little bit, but then that's that, $20 trillion carry trade. So, and then you can see cable's holding up about the same as a little less than the yen. And, I say these things, on webinars, but I don't always have charts to show it. And so that's why I was very enthusiastic when I saw this article today. I thought, wow, that's really cool. We're able to, basically see, the process all together. So it's a matter of basically, looking at, the different, products out there and trying to understand them better. And then at least it's a fundamental. Okay, it's a fundamental. Because we don't have fundamentals that, Giannis has done some webinars about fundamentals over the years and, made videos about them. And fundamentals are just not what they used to be. Ever since 2008, fundamentals have been basically, I want to say, what's it when they call it a facade, the word facade. What it means basically is it makes things look good, but it's not necessarily real. And so fundamentals nowadays are kind of more of a facade. They make things sound like, or they make things look better than what they are. That's why the data comes out, and then before you know it, a few minutes later, not a few minutes later, a month later, they revise them. And they change them, and they can be pretty dramatic in the revisions. And that's the weird part, is that, they actually, they actually revise them. It's like, wow, that's kind of wild, and the markets don't adjust once in a while they'll adjust to the revision, but not a lot. They go excitingly to the next statistic, So I just thought it was well worth putting in there about the way the world reserve of gold is, and how it stands. Matter of fact, here's an interesting one too. It's with the global international reserves. Gold is the blue, and you can see red is the dollar, and how the dollar perked up in the 50s and started to challenge gold. And then I would imagine this inflation thing. Gold took off up in here. You see that right there? That's probably because it was 1975. And the Jimmy Carter inflation was starting to perk up. So the dollar was doing really well. It was gaining against it. We started to move into the inflation factor. And then here's 1980, the peak of inflation at the end of the Jimmy Carter's administration. And 81 is right there. And that's Reagan comes in, and you can see the inflation factor basically dropping in the sense that gold went down pretty dramatically. as a reserve. And the dollar launched itself up all the way up until right here. Basically, there's 2000. That's like 2008 right there, 2010, and then you can see it's starting to drop off because at that point the world is relatively bankrupt. And when I say that, I always go on my little just kind of tear about Lloyd's of London and Merrill Lynch and Santander, Bank of Scotland, and Barclays Bank, and Citibank in New York, and Wachovia, and you go on all these things. Lloyd's of London, they're all out of business. They're only a name now. They're a facade. They're owned by other entities. They went out of business, and they bought the names because the names were really good names. Most of the population has no idea that the world went bankrupt, and and I know some people go like, "What's he talking about? If the world went bankrupt, it'd be the first thing on the news." No, it isn't. It'd be the last thing on the news, because Mr. Obama was the president during those years, from 2009 all the way through, and the world went bankrupt literally weeks before or right at his election, right at the election itself, when they knew that he was going to win. And so, it was more than just Mr. Obama, but it just, in other words, they're not going to tell you bad things. That side, they don't do that. Only if it's like capitalists do they tell you bad things. When it comes to socialists and Marxists, they tell you good things or they don't say anything at all. So, and you can see here, that's these charts reflect all that. And then you can see here, Mr. Trump comes in, and it's capitalism, and it starts to, where's it at here? Actually, no, that's not it at all. Yeah, Mr. Trump comes in, and gold, which was been falling, basically, it starts to move back up, which is interesting because Mr. Trump's policies were fantastic for the economy. And we had a super economy and almost no inflation whatsoever. And so you can see here, it's starting to turn. It could be our debt level back then. It was a split government for a while, and then Mr. Trump, becomes attacked over and over again by the House, constantly just wrecking, his administration and trying to get rid of him. They really, there's socialists here that want socialism to be America. It never will be because the laws don't allow it. But they don't. That doesn't stop them any. So that's the global international reserves. And so then from there, let's see what other charts I have in this. And here's what's this one is. Global international reserves in percentage. Looks like it's a video actually. Oh, it's a video. Yeah. So what it does is, let's see if we can get to do it. There it is. There is the reserves. Move it back. Wait a minute, it's making noise there too. I hear it. Okay, let me get rid of that. Where's it hiding? There you go. That's gone. All right, we got rid of that. All right, that's good. All right, now let's see where we at here. I think I lost my zoom at CERN. There it is. Nope. There we go. Okay, you're not hearing CERN, so that's good. All right, it's fine with me. Let me just double check in case I need to tell someone that's not working. Huh. No volume, I guess. Yeah, the volume has died again. Okay, no problem. All right. Oh, darn, it's algebraic QFT. I like that stuff. All right. So from there, that was the logic of it all. Wow, look at the dollar index. Dollar index has taken off there now. Let's take a look at the euro. Euro is about the same, maybe a little bit lower than before. It's pushing down cleanly in the sell. It's today's noise. That's what it really comes down to. Yeah, we just don't be too paranoid out of it all. It just is what it is. Okay. I mean, if we got down 3% or 2%, even 1% would be interesting, I mean, at this point, we don't even see that. I mean, right now, the Dow is down 0.36%. In other words, not even one full percentage point, a third of a percentage point. So, all right, now, let's see what else we got there. From there, okay. So, let's check out cable. There's the cable. And cable's doing the same thing. It's backing off. And it had a green and a red there yesterday looking for the volatility. And we're still in that weekly buy. There's not much pressure there also at the same time. Let's go to Swiss. Swiss popped up. How about that? A little pressure there with a green and a red. Now, I mean, it's starting to do it now. Are they going to shift directions? I would kind of doubt it, just solely because you see the weekly the way it is pressing down. So I'm not too convinced that we're going to see that type of action.
In the relative entropy by themselves,
so that's
you
the
read
Swiss
divergent, the total quantity is
acting
not
extremely
divergent.
well.
But to prove this generalized second law, you really need to define. It's a good idea to have this definition.
The volume is back. Let me see
Another
if I can kill
thing
this.
is the strong subadditive paradox, which has been talked about a lot. Once again, they are talking about entanglement between the modes near the black hole, inside the black hole, and it would be good to have a well-defined notion of entanglement entropy. So these are the motivations.
Okay.
Now, how do we proceed?
There we go. Now CERN is off. No problem, traders. This is the hour of markets, not the hour of physics. So from there, we shoot over to the yen. You see the yen's making a nice little pop up, unfortunately, for the people in Japan. Dollar is, obviously dominating at the moment. This is probably going to... Look, I don't believe that this is going to do anything more than just make that basic noise. In other words, we're seeing down 150 points. Who knows? By 2 in the afternoon or 3 in the afternoon, this thing could be plus 10, on the Dow. I mean, really. This is now NASDAQ is down 75 points. The S&P 500 is down 24 points. Let's just show you again the stock market. There it is right there. So, there was that. It was starting to lift up. It failed. Started lifting up again and failed a little bit more. So, they're slowly working its way down. In this case here, you can see it's still in the buy. Went into the buy right there. And, and then it went into the sell right here off of that one. But it didn't last long. It's already trying to push itself back into the buy right there again. So, taking a little of the profit from the big profit. From the Swiss franc, the yen, from the Japanese yen, we go over to the Turkish lira. There it is right there. Turkish lira is backed off, which I'm very happy to see. We'd like to see this thing start to consolidate more and more and more into a tight box. That would be very good. You see here the pressure is on it. It's trying to get into the sell as we speak. But again, it's in that weekly buy, and this is just noise in the background. Oh, let's see what Barney says about the Okay, so the unemployment rate. That they thought that now payrolls. If non-farm payrolls were down, that was going to excite the market, the interest rate market everywhere, and so unemployment has risen, which is kind of makes it put some pressure on them to lower rates. But the thing is, the employment number is almost twice what they were expecting. So jobs added in May is 272,000. So it's kind of like, okay, who cares? A 4% unemployment rate is not that bad to begin with. That's considered full employment to begin with. And so an increase of jobs scares the market. That's what it does. But not scared enough to have any great influence on it, more than just an intraday noise, All right. And then from there, we go to, let's go to the South African Rand, which is still up. It was knocked down for a while there and is still trying to battle its way up, which is odd, with the dollar being so strong. I guess they haven't been able to put a government together yet. I guess that's where we're at. Every time we go to look, it seems like they're still negotiating. And I'm constantly looking for that DA party to be part of the government, and I bet that there's a big battle going on not to have the DA party be part of the government. I think that would be like a capitulation of the ANC, and so that's probably why we're not seeing the moves from the South African Rand. Let's see if we can find anything else here. Let's see. Where's it at? South African Rand. The elections. There it is right there. Let's see. Nope, nothing yet. Yeah, so the DA party is the second largest party now. Democratic Alliance at 22%. And then Zuma's 3%. And see, they could merge with Zuma and be really radical and wreck the economy even more. If they merge with the DA, that would only help the economy. I don't see the ANC really wanting to join up with the Democrat Alliance. They're Marxist, and the Democratic Alliance is capitalist. So chances are, I'm not sure what other ones they think they can team up with. I guess Zuma's really got them, really disrupted, and that's why we say there's about a 30% haircut in, in the price of itself, So, all right, that basically takes us to the metals complex. We take a look and see what gold is doing and silver and things like that. And the stock market's slowly climbing back up. We'll show you that. See, slowly pushing up. It's still in that daily, that intraday buy right there. And it's climbing up and starting to go after the high right here. So, that's the action we're seeing. All right, now let's go back to, that's the ANC. This is the South African Rand. It's been in that upwardly slope. And with that upwardly slope, we go to gold, and it should be on a downwardly slope for the same period of time of like 3 weeks. And there is gold. And it went into the buy for a couple days, and there it is. It's rolled right over again. It's still in the weekly sell. It was flirting with weekly buy, but this news has definitely hurt it. Look at that. Gold down over $50 from its high. It's 60. The high today was 2,406. Let's say we'll call it 204,007. 407, all right? And the low today is 41. No, what is it? I'm sorry. The low today is 236. So, what is that? That's $76 down. It's almost $100 down day, it's building into that. But it's a $76 down from high to low. So they're putting that pressure onto the gold. That's why we've been hanging out in that weekly sell, I guess. Now, when it came to silver was trying to lift up nicely. Now they've pushed it back into the sell because they've taken silver down almost $2 for the day. But see, that's still in a weekly buy, and gold is still in a weekly sell, and there's not a lot of commitment to direction at this point. They're just kind of bouncing along, trying to just stay out of their own way, basically. That is really what it comes down to. Will this last? I don't know. When I'm saying will it last for weeks and months, I doubt it. It's more like it's going to last for a day or two here or there. It's going to be pressure. Markets are looking for some type of look. Let me disrupt my own self. I called it a week ago. We started calling it transitory. Interest rates are transitory. That's what it comes down to. We know that interest rates are going to go down. Now the problem is that everybody wants them to go down last December. And here we are in June. And so and they in December predicted, the Federal Reserve chairman said, we're going to cut probably like 5-6 times. And at one point he said 7 rate cuts. Well, none of them have happened. And this number today, they were hoping. They were pushing really hard for this to be the signal that they could lower rates. And here, what do we get? We get, we get this, this government jobs thing that kicks out, an extra 100,000 jobs. And so that drives unemployment. Unemployment's moved to over 4%. But that's still considered full employment. So what they were really needing is a drop in employment so that they could say, oh my goodness, and that's what the 4% represents, of course. That is a drop because we were at 3.7, 3.8 before that. And so, that's the drop. I know it's that odd language, where up is down, down is up, yes is no, no is yes, And that's where we stand with it at this point. All right, so from there we'll take a look at copper. Oh, I have an interest. I had an article yesterday, and we didn't get to it, and it was about. I'm always telling you these things out loud, and it's nice when I see it in writing, and I need to show it to you when it's in writing, because this way at least it makes some sense, to you. Because here you have me saying, these concepts of about China, and the lack of growth, and all that other stuff, and then what we get is we get this finally get something in black and white, and once we get something in black and white, it's like cool. And so let me find that. I want to find the Chinese story yesterday. It was fascinating. Just fascinating. Let's see right there. Matter of fact, I have an interesting article. I'm going to throw that up there while I'm hunting for the first one. And that is that there's a feeling out there, as much as I keep on telling you things are slow here in the States. It says here, second quarter recession this year looks increasingly likely. All the math is starting to show that GDP now forecast was in the second quarter, they were looking at 3.5%, 4%. Then it's got down to 1.4%, and we're down at 1.4%. And there's a possibility this thing goes flying even more. So that's that. I mean, I've talked about that before, and it's just again, it's just nice to see this stuff in clear, plain English, written down, and I feel like. At least that that I'm not just rambling off the top of my head. There are facts. Let me show you this data from China. Here it is. Here it comes. right here. China property stocks tumble into bear market as Beijing bailout fades. I've been saying to you that they just don't have the ability to bail things out. And every time they come out and say we're going to add a little bit more, it's nothing to what their size of their. It says here 3 weeks after Beijing announced historic measures, including the central bank providing 1 trillion yuan, which is about 1 trillion yuan is what is that? That's 7 yuan to the dollar, basically. So would that be like 30? That might be like 40. Is that $40 billion? Maybe it's like $100 billion. So I guess it's like 200. Let's see, 200. It's not even like $100 billion. The bail, that they're trying to use to bail. They need to put in like $2 trillion or $1 trillion, not 1 trillion yuan. So, and it says here that mortgage. Let's see, 1 trillion yuan to extra funding. It says easing mortgage rules. The local government's planning to purchase apartments to clear excess supply, all in a bid to stabilize the worsening downturn in residential property markets. Faith in the housing recovery has faltered yet again as property stocks have tumbled into a bear market. Now, we've talked about this where we've seen two major corporations, one Evergrande couldn't find $25 million. They had $11 billion. They were valued at $11 billion. Okay? And they couldn't find $25 million to pay a bond payment. It's like, what did they do with all this money? Where'd the 10 billion, $975 billion go? Yeah. They're valued at $11 billion. Where did 10 of that trillion, okay? I'm sorry. Yeah, that's right. Billion. Where did $10 billion and almost basically, where did the $11 billion go? They couldn't find 25 million out of it. You subtract 25 million from 11 billion, that comes out to be 10 billion 975 billion dollars. 10.975 versus 11. I mean, things like that really stick out in my mind when I see that, and I say these things on the webinar, and I feel like, oh man, they must think I'm nuts, It says here that between mid-April and mid-May, investors hoped that more decisive government intervention in the world's second biggest economy. See, again, this is Bloomberg saying this. Why do they keep on saying it's the second biggest economy when we all know? I just showed you on the currency chart there of reserves and so forth. European Union is the second largest economy in the world. Why they want to diss the Europeans, I have no idea. But I guess because you're only semi-socialist, and this is communist, so they love communists. It says here that second biggest economy to shore up the property market would slow the descent. New measures were announced in May. Since then, after 73% surge in Bloomberg Intelligence gauge of Chinese developers, the index has tumbled into a bear market. So what did it do? Give up the 73% surge and then drop another 50% or something? Just being able to, let's see, what's this chart? Let's see if this helps any. Not even sure what that is. But it's come from the 275 area. It's down below 50 now. Let's see what this chart was. This chart, it's a property chart. In recent titled China Unveils Housing Market Bailout. Let's see. The property market downturn has been ongoing since 2021. Confidence of Chinese population about economic revival. So, I mean, you go from 275 down to 50. That's an 80% drop. That's dramatic. That's really dramatic. So it's like a 90% drop. So, all right, I just wanted to show these things because I talk about them, and I always feel bad that I'm not really showing you anything more than what I read. So there are some good charts to clarify all that concern I've had. All right, now from there, we will shoot over to. Let's see. Let's put the platinum up there. There's platinum. You see, platinum's been doing this. It's been in the daily sell from here, but now the weekly is starting to make a threat. And we'll see what they do with that. Maybe next week they start to push it into a sell. Wouldn't that be something if gold ended up starting to really top out? That would not be the best things, that's for sure. All right, now from there we go over to the energy sector. So there is crude oil. Crude oil is holding up. It's a second day of buy, but it's still in that weekly sell. And then when we throw the beta up, let's put that beta up there. There it is. There's the crude oil there. Same situation. It's on a second day of a buy. See the two green dots, and this yesterday's bar. And the weekly bar, it's still in the weekly sell now, all these weeks. Let's take a look at Brent. There's Brent. You see Brent same way. It's daily buy for a second day. And it's actually below its close of yesterday at this point. And you can see the weekly has been in that weekly sell also. It's not able to really recover out of it. And you know what we talked about, not know what you know, but let's just point this out. The stock market, let me just show you. I looked up, and the stock market is still probably in that daily buy because it's climbing still. Yeah, look at that. Oh, it did. They pushed it into the sell. Where did they push it into the sell? Right here for about 3 or 4 bars, and then jumped back into a buy 4 bars back right there. So went into the sell from here across, and now we're already in an intraday buy again. And it's lifting up and taking out that high over here of the 52 area. And we got down to 29 over here. That was the low, 29.25. 329. 329 was the low. And now we're at 353. And so as we look at these markets, we look at the fundamentals around the world. I said maybe by 2 o'clock they go plus. The way it's going at this point, it could actually go plus before the webinar is over with. And let's go to our shorter term tool right there. And that's been in the buy too, like from the 45 area, it's up into the 52s now. Interesting. There we are, and there's all 3 of them again. You can see just on an upwardly drive. Just up, up, and away. Boom, 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 boom. Boom, 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 boom. See it right there. Yep. And then from there, we go over to we were looking at the energies. Let's go back to the energies. There's the crude oil. We were just looking at the Brent. Let's put the Brent back up again. There's Brent. Got into the mid 70s. Pretty cool, huh? Let's see, what was that? Right there. Brent got down to 76 and change. So, I mean, the world functions on oil. Without it, we don't go anywhere. We don't do anything. You can't make... I forget how many products are made from oil that we use every day. Something like 270 products, from like a toothbrush to, fertilizer to all kinds of things are made out of oil. You can't get rid of this stuff. The world uses it. There's nothing to replace it. That's the problem. From there, we'll go over to natural gas. And there's nat gas. That's NQ. That's the Tech 100. There's natural gas right there. Alrighty. So from there, we go to that stock down in Spain. Oh, and let me say something about natural gas. In that weekly buy for a while, it's not backing off. we've jumped in the buy 3 days back, and it's still moving up and trying to go after the highs. And then there it is. There's the Spanish company trapped in between this. We'll just show you where it's been trapped all this time now. Trapped in the $24.50 area. Finds ways to bang against 25. Fails. Drifts underneath a little bit. You can see it's 4 days in a sell. You see the 4 red dots and the 3 bars there. And that's yesterday's close, not today's yet. And at the same time, there is the weekly. This thing's starting. That's something we're kind of happy to see. And that is that the energy company down in Spain is heading towards a weekly sell. That might be alleviate some pressure on Europe's expensive energy. That would be very, very positive. From the energies, we'll minimize that. I guess what we can do is take a look at some of the stock indices. We're almost time to get out of here anyway. But let's take a look at the Nikkei. And there's the Nikkei. It was down yesterday, up a little bit today. You can see it was in a daily buy for like the last 5 days. And, that was yesterday, so it's still in the plus even with the red dot. You can see here the weekly buy is holding up. We'll go take a look at Kospi. See what they're doing in South Korea. South Korea has been in that weekly sell now for 10 weeks. You can see last 2 days it's been in a daily buy. Just pushing up. Pushing and pushing and pushing up. Let me just do this. There's the 7th. There's the 5th. They didn't have a trade for the 6th. Interesting. Maybe it was a holiday. All right. So, let's take a look at Taiwan, the chip universe. TWI. Right there. Looks like it's in a daily buy for 3 days now. And it's in a weekly buy for 8 weeks. They're not really, they're up at the highs too, up on close to the 22,000 area. So Taiwan, even with all that noise from China, then people are not running away from the product whatsoever. And then we go to Philippines, and we'll take a look at let's take a look at Shanghai. We'll go Philippines and then Shanghai. There's the Philippines. Philippines have been lifting up for the last couple of days. Looks like it's the second day in a buy. And there is Shanghai. Shanghai made a new low again today. Looks like it's going after the 3,000 area from back in April. And you can see the weekly, the third week in a weekly sell. Then we take a look at Hong Kong. Hong Kong closed in a sell, and it's been in a weekly sell for 2 weeks now. And you can see daily wise, something like 6 out of the last 7 days it's been in a daily sell. So the pressure is on pretty well when it comes to some of these stock indices. Not too bad, but is what it is. All right, traders, everybody have a safe and smart weekend. We will catch you all on Monday, TGIM. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. And my title today is Fundamentals versus Algorithms. So, be safe, be smart. Ta-ta for now.